Home prices fell for the fourth consecutive month and sales slid to 29% below the same month last year, which is well below the 10-year moving average for housing sales in Canada. So it's safe to say that market activity due to higher interest rates has pretty much collapsed. But what does that really mean for home prices and where are they going in the near future? The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right. All right, so welcome back to your Canadian real estate update for August of 2022 with some really interesting stats this month released from CREA, which is the Canadian Real Estate Association. Now, this is the body that governs all real estate in Canada, and I'll be careful when we talk about governing because it doesn't necessarily mean they're the regulator, but they are the association that handles the MLS system and coordinates with regional boards. And every month they put out statistics on what's happening in the broader Canadian real estate market. And this month's is really, really interesting because there's some really interesting highlights here. First and foremost, sales are down for the fourth consecutive month. Housing prices are down for the fourth consecutive month. We're seeing housing sales down 30% compared to what they were last year. And all in all, the higher interest rates are reflecting in the greater Canadian market. But there are two markets that are seeing significantly more of a downturn than the rest of the country. And there are still markets that are relatively flat. You can check out the Calgary Real Estate Update video that I posted recently for that. And unlike in normal videos where I ask you to subscribe and like and everything else, today I'm going to skip all that because I want to mention before I get into the actual video, the potential buying opportunity that is going to come for Canadians in the near future here, because there's a high likelihood that we are now nearing that low point in the market, because typically when we have these sorts of price corrections, they last 3 to 12 months, and then we start to see more normalization in the market. So for those who are thinking about getting into the real estate market, there's obviously this fear associated with jumping in right now, because am I going to jump in and pay too much? Am I going to find myself in a situation where I bought a house and I owe more than what I bought it for? And all of those questions are really good questions to be asking. However, most people are asking them and answering with the short term in mind rather than the long term in mind. And that is one of the biggest mistakes that people can make in real estate. So I want to make sure that people have the tools that they need in order to jump into this market when they're ready and have all the information that they need in order to make the informed decision and a right decision and a really good long-term decision. So as a result, we've put together our Home Buyers Masterclass that is starting September 12th. This is designed to be a modular course that answers every single question you could possibly have with respect to buying a home in Canada, including all the lawyer stuff, the home inspection stuff, the mortgage stuff. It's just designed to be a completely holistic approach so you don't have to rely on your realtor or your mortgage brokers, or worse yet, your family member that thinks they know a lot about real estate but maybe knows nothing. Or worse yet, you could look to the comments on my videos for advice and find way worse information there than you'll find anywhere else. Those are all really interesting, by the way. There's a lot of people that mean well, but the reality is that most people just don't understand the market. So if you want to enroll in our Homebuyer Masterclass, we're going to do it in cohorts. You'll have basically 3 or 4 opportunities a year to do it. You can go to homebuyermasterclass.ca. I'll put a link in the description below. I'll actually do it this time because I forgot to put it there for the Calgary video. And you can go to the website, sign up, and if you sign up today, you're going to get a significantly better price than you will at any other time. If you sign up prior to August 31st, you'll still get an early bird discount, and your last opportunity to sign up for the Homebuyer Masterclass will be September 11th. Oh, and by the way, if you sign up, depending on when you sign up, you'll get between $1,000 and $1,500 as a credit at Mortgage 360 if you end up choosing us for your mortgage. So it's a win-win situation. Oh, and aside from getting a mortgage with us, it's the only way you'll be able to access me one-on-one to ask your questions with a 15-minute consult until at least 2023. Okay, so let's get into it. Let's discuss home prices in Canada and what's going on. Let's start by checking out the headlines. Home price skid hits 4 months amid steep interest rate hikes. That's the headline from B&M Bloomberg. As you can see, they point out several things here. Benchmark home prices declined by 1.7% in July, according to data released Monday from the Canadian Real Estate Association. The number of sales also continued to drop, falling 5.3% from June and 29.3% from a year earlier. Now, this is where it gets really interesting, because if you jump into the CREA news release, what you'll see is that they've started pointing out the actual non-seasonally adjusted average sale price and it posted a 5% year over year decline in July. So, this is the first time that Korea, at least to my knowledge, has pointed out that the average sale price has come down compared to last year, which means in Canada, in general, you will see a lower average price today than you would have a year ago. But the thing is, that's a little bit misleading because we also have what's called the benchmark price. And the problem with average price is that the average price can be skewed by a lot of things. Markets like Toronto and BC that are significantly bigger than the rest of Canada, that have significantly more sales, will weigh on the average price more than a place like Calgary or St. John's or Halifax. So that's the first problem. The other problem with it is that the average sale price accounts for every single property that's sold in Canada, which means you've got $5 million mansions and $100,000 condos that are being all lumped into one average, and that can skew the numbers, especially if high-end houses, which tend to have very few sales, either have a really good month or a really bad month. That can really skew the average numbers. So as a result, there's what's called the benchmark price. And the benchmark price, whether it's in real estate or whether it's in other industries, is the price for a specific type of good that is standardized. So in houses, for example, it could be a 2-bedroom, 2-story on a certain size lot. And that benchmark price looks at the same type of house over a period of time in the same area, which is a much more reliable indicator of what's actually happening with housing prices. And as a result, what we're seeing is that the benchmark price isn't reflecting a reduction in prices as much as the average price. And that is largely because that middle market of the, let's call them $400,000 to $800,000 homes is still pretty active, especially in areas like Edmonton and Calgary and Saskatoon, and basically the lower priced markets in the country. So I want to take you through, I want to show you some of the graphs here. Let's start first and foremost with residential sales activity. As you can see, sales activity has dropped to levels not seen since before the pandemic. So in other words, we're seeing this normalize. In fact, if you don't seasonally adjust it and you look at the July numbers of 2022 compared to the July numbers of 2021, we're down about 30% in sales. Now, that being said, July of 2021, we were up pretty significantly in sales. So this is more of a normalization, but it's more of a normalization, as you can see, going back towards that 2017 to 2020 period, as opposed to this craziness that we saw in 2020 and 2021. So we're seeing things, at least in most places, get more or less back to normal. And then we get into residential market balance. Now, this one's really interesting. Going into that kind of 2020 to 2021 period, you saw that sales to new listing ratio was quite high. In other words, there were more sales than there were new listings, which led to higher prices. Now we're seeing that sales to new listing ratio drop quite substantially, which means we're heading towards a more balanced market. In fact, I think the stat was that there's about 3.3 months of supply in the Canadian real estate market, which generally 3 months supply is considered a more balanced market, which means it doesn't favor the sellers or the buyers quite yet. Then moving into residential price, this is the really interesting graph. This is average versus benchmark price. Now you can see the average price, which is the red line, is below what it was a year previous. But that benchmark price, which again is that standardized price, is down, but not down as much as the average. And what that tells me, at least what I infer from that, is that we're seeing a lot less sales in the super high-end areas, and we're seeing a pretty big reduction in price in the high-end areas. So think Toronto, $1 million plus homes, think Vancouver, $1 million plus homes. The corrections in those two markets are having a pretty significant impact on the average price. And this next graph shows that. Moving into the residential average price, what you can see is in Canada, we're down 5%, but almost every single province is up from the perspective of average home price, except for Ontario. And you look at this Ontario number is down a little bit, but it obviously has a very significant impact on the overall prices in Canada. So a small change in Ontario really affects all the averages across the country, because if you see a $200,000 price drop in Ontario, but Regina housing prices are selling for $400,000, well, that $200,000 price drop has a pretty significant impact on the overall averages across the country. And then last but not least, moving into the MLS HPI benchmark price. This is the most reliable data we have for home prices in Canada. What you can see, and this is the big black line here, as the composite prices are starting to fall off of their highs. I do not expect that they will get back down to where they were in January of 2019 or just basically pre-pandemic, but I do suspect we're probably going to see them fall a little bit further. In fact, most of the major banks in Canada have suggested that housing prices are going to go down by up to 25% off their peaks. We're definitely seeing that in the Ontario market, which is down 15 to 18% depending on the locality. And we are seeing that in the Vancouver market, which is down 8 to 9%. So we expect those housing prices are going to continue to fall, probably get down in that 20 to 25% range. And then the question becomes, where's the buying opportunity? And can I find the house that I want to live in for the long term at a price that I can afford? And those questions will be answered in that Homebuyer Masterclass. So again, homebuyermasterclass.ca. This is going to be the single best source of information for Canadians on how to buy a home in Canada. It's going to take away that reliance on realtors, mortgage brokers, bankers, and worst of all, family members. And it's going to give you the tools that you need in order to be super informed so that when the time is right for you, you can make the decision that's right for you. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video, and we'll see you on the very next one. Cheers.